All right, no doubt about it, 2025 was a rocky year for the economy. There was on again, off again tariffs causing prices to rise. There was some stock market volatility. There was recently. I think we've been pretty solid, right? Yeah. In addition, federal layoffs kickstarted a year that has seen over 1 million Americans losing their jobs. So financial instructor Michael Masserant, he's got it all right up here. He knows what happened last year and what we need to do with that for next year. From the Retirement Education Foundation, let's talk about what we learned looking back at 2025, Michael.
Yeah, so looking back at 2025, it was a pretty tumultuous year, and sitting here now in December, it's kind of easy to forget that.
Yeah.
And I think it's really helpful to think back and put ourselves back in our shoes back in April, when there were a lot of tariff announcements. The stock market fell 19, almost 20% in the span of a couple of weeks.
Yes.
And there was some real fear around the economy, the stock market, what the future of 25 and 26 might look like. And then now here we are today. The stock market has recovered almost 40%.
Wow.
Since that April trough.
Yes.
And now people are we're cruising along, inflation's coming down, the job market's softening a little bit, but we're still in the mid-4s, and people kind of tend to forget how scared we all really were back in April. And it's really important to keep that in mind as we approach 2026, is to understand no one knows what the future is going to hold. But we kind of all got a get out of jail free card for 2025, and it's a good time to reflect on what happened this year and what might happen next year to make sure your finances are tucked away properly.
All right, so the tariffs, where have we landed with these tariffs, or we're still figuring that out? So
a lot of the tariffs are still in place. They've pulled some of the tariffs back. They've made some exceptions and some carve-outs for some items that are more popularly imported, but they are still intact, and the United States is collecting revenue from them, and that might be one of the factors that's sort of keeping inflation in that stubborn 2.5 range. The Fed wants inflation around 2%.
Okay.
We've been bouncing around the mid to high 2s. And one of the reasons for that may be the tariffs that are still in place. And so there's the pros and the cons. The government's collecting some revenue from the tariffs, but it's keeping inflation a little higher. So it's a balancing act.
And is there anything we personally can learn at watching this whole tariff political/economical thing unravel?
So I think the most important personal finance takeaway is that we can't control a lot of these things. And so what we can control is our own personal finances. When the stock market's crashing, hopefully before that happened, we had a plan in place to make sure that we're not going to panic. If there's a job loss, if there's something going on with our own personal finances, we need to make sure we have an emergency fund. We need to make sure we're not dipping into credit card debt and relying on borrowing money for finances. So we can't control the stock market. We can't control inflation, but we can control our own personal finances, and that's really important to focus on for 2026.
Now, one of the other issues that we looked at, it was a big talking point in 2025, of course, was inflation. And as that, you talk about that relating a little bit to the tariffs. How does that, what can we do? Obviously, we can't do anything about it. What can we do with it, though, going forward?
So really just monitoring where are we spending our money. A lot of people are surprised to recognize, oh my gosh, we're spending way more than we thought on dining out or on travel. And those are the two big hot inflation areas of 2025. And so understanding where's our money going, and if we're cutting our budget too tight, where can we cut back so that inflation's not biting us too hard?
All right. What else when you look back at 2025? Because you're right, we all have short memories. There was a moment where we were, clutching our pearls. But when you look back, well, the One Big Beautiful Bill Act, of course, that was more recent. What do we learn from looking at that?
So in terms of the OBBBA, as they call it.
Is that what it's being called?
Yes.
OBBBA?
Yep. If the prior tax laws had sunsetted, which they were scheduled to do, taxes would have gone up for everybody. So this new tax law kept taxes down across the board. Now, some people did benefit more than others. There were some compromises made on the Medicaid side, but this did keep taxes down across the board. And it'll be interesting to see going forward into 2026 and beyond how this impacts, especially seniors, because seniors got a lot of senior deductions in the bill. And so it'll be interesting to see how this impacts seniors going forward.
Yeah, that's one that there's still some unknowns about how that's going to play out, right?
The IRS is still trying to publish some of the official script here, but we have a pretty good handle on what it'll look like. And for everyone across the board, especially seniors, there will be some benefits.
All right. Okay, so we just looked back. Now, next hour, we're going to look forward. And what can we start doing as of now to set ourselves up financially?
Well, what we've said in the past, no one has a crystal ball, but we can prepare for the worst and hope for the best. And so just making sure that we're prepared for 2026 is really important, and we have a lot of stuff to tackle in the next hour.
All right, we're ready. Get out your notepad. Get ready to take some notes in your phone, however you want to do it. Good stuff. Michael, thank you as always.
Of course.
refedu.org.